Hello friends, my name is Pinaki and welcome to my channel Fintech Logics. So today's topic of discussion would be on another type of debt mutual fund, which is actually called as ultra short-term mutual fund. Basically, we'll look at a concept, when to invest in these kind of funds and why, and a strategy to get in and out. Now, if you have not seen my earlier videos on debt mutual funds or personal finance, I'll provide a link here. Please have a look. So let's begin. So we will stick to our skeleton. So this mutual fund is slightly more riskier than the liquid fund that we have covered, but this is apt for all age groups. Any age group can go for this one. um, Specific goal for this mutual fund would be that the investment horizon should not be more than 6 months. If you need any specific amount to be invested only for that duration, we can definitely go for this one. And this definitely gives a better return than the liquid fund because it is more risky. I'll talk about why it is risky and why it gives more return in the later part of my video, but definitely somebody can look for this goal while going for this mutual fund. Now, for choosing this mutual fund, it's pretty simple. So you would go to debt mutual fund section and you would select a ultra short term duration fund. We would definitely select fund in growth category and not in dividend payout category. Expense ratio, let's try to stick to less than 0.4% range because you would get enough options there, and I believe that is good for us, not more than that this range. Now AUM and CAGR, highest or higher is the better, so we should go for those kind of funds. There is no issue in looking for those funds. Now, volatility and exit load, we'll see. Uh, Expense ratio and AUM we talked about. So CAGR, look for 5 to 10%, closer or more towards 10% is better, more than 7% or 6.5 to 7.5%, 8%. There are plenty of funds in that category of 2 years and 3 years, and you can go for those things. Now, specifically talking about risk and volatility angles, we have to understand that okay, this invests in similar funds like liquid funds, but still it is riskier because you see that highlighted content of NCDs and bonds. So this mutual fund is having more investment in bonds of private companies. So that is why probably we are getting a little more return, but it is definitely exposed to credit risk, which is not as secured as government funds, but definitely the risk is also not that high that we cannot look for this fund. Now, let's look at multiple funds, and you would see probably a straight line pattern of the funds for investing. So, go for those kind of funds for your investment purpose. Now, the strategy for investment would be we can go on a systematic investment plan if it is multiple investment, or else a long term investment, lump sum investment for a certain period. Now, tax, as we talked about, is pretty similar to bond fund, so we should be knowing that okay, this will be taxed as per our income slabs. Now, on an average, so if you see this one on a summary, if you want to draw on this one, this is riskier than liquid fund. If you have that risk appetite of uh, going for this one, uh, then you should definitely consider investing in ultra short term funds as well. I hope this should have given you a idea about the ultra short term fund. Thanks a lot for watching my videos. Please do like, share, and subscribe my video so that you can get further notification on forthcoming videos. Thank you.